Hey everyone, welcome to my channel. I'm Doris, and today let's talk about the U.S. economy. Right now, having seen the non-farm payrolls data posted on Friday, that the U.S. unemployment rate is likely to accelerate. Um, Non-farm payrolls in October was lower than expected, with education and healthcare services, government sector, and construction as the main contributors of the job creation. This also means that the private sectors have been weak in contributing more job demands. Right now, the auto strike has led to a significant decline in manufacturing employment, and a recent slowdown in manufacturing backflow could also reduce future growth in manufacturing and construction jobs. The U.S. job market continues to cool, showing the current weak characteristics of many industries. The U.S. unemployment rate may usher in an accelerated period. Recently, the U.S. economic data has weakened again, and it is expected that the Federal Reserve will not raise interest rates in December. The timing of the first rate cut may be around the middle of next year. In the short term, the dollar index and the U.S. Treasury rate are expected to be high and weak and volatile. The October U.S. non-farm employment added 150,000. Unemployment rate was 3.9%, and wage increased by 4.1% on year. This shows that there's a weak employment market in the U.S. right now, and the effect of the high interest rate has been rippled through the labor market. Also, the wage increase further shows that there may be a lack of wage increase affected by the auto manufacturers strike and its contracts that recently established, but also shows that the businesses will face a higher cost to produce, and that the inflation will likely to be accelerated due to this wage increase. Non-farm payrolls in October were lower than expected, with education and healthcare services and government sector and construction as the main contributors of the job creation. Education and health services increased by 89,000, leisure and hospitality industries increased by 19,000, which are the main contributors to the new number of service production. In addition, the labor force participation rate fell to 62.7% in October, below expectations and a previous reading of 62.8%. The auto strike has led to a significant decline in manufacturing employment. With a recent slowdown in manufacturing backflow could also reduce future growth in manufacturing and construction jobs. First, manufacturing jobs fell by 35,000 in October, including 33,000 from a decline in the auto industry employment due to strike activity. Second, jobs in U.S. construction industry has grown rapidly in this year, driven by the return of U.S. manufacturing. However, judging from the recent situation of manufacturing construction expenditure, the monthly frequency data of manufacturing construction expenditure has been weak in the past few months, which may reflect the negative demand of equipment investment and compared to the previous quarter of manufacturing construction expenditure in the third quarter. With a recent slowdown in manufacturing backflow momentum, U.S. construction and manufacturing jobs growth may also weaken in the future. The U.S. unemployment rate rose again in October, and the future jobs vacancy rate is expected to gradually approach the central trend level. The cooling job market will be more of new unemployment, and the unemployment rate is likely to accelerate in the coming months. Recent ISM manufacturing and manufacturing PMI boost both less than expected, and at the same time, we predict the U.S. October CPI growth to be 3.3%, a decline from 3.7% from September, and the year-on-year growth of 4.1%. For the asset prices, the dollar index is expected to trade weekly around 105 to 106 and the 10-year Treasury rate, with the ISM manufacturing and non-manufacturing PMI all weaker around 4.5%. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.